Hello and welcome. My name is Joe O'Mara. I'm the Head of Aviation Finance with KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to be joined by Karl Griffin, who is the CEO of Genesis. Karl, thanks for joining us today. Before we get into the meat of the questions, do you want to tell our watchers a little bit about Genesis?
Yeah, well, thanks, Joe. Thanks for the invitation. Genesis is an aircraft leasing business set up here in Ireland. We own and manage 74 narrow-body current technology aircraft, and we're owned by Bearings, the global investment advisor based in the US.
And Karl, as we look out over, and I should say we're recording this in the first week of January, as you look back on the course of 2020, how, in looking at your customer base, did performance evolve really since the pandemic hit from March onwards? And what differences did you see in the various geographies in which you operate?
So, the pandemic started, I suppose, in around March, although we saw sort of leading indicators towards January, February. And, we started to look at our customer base early March, started working very closely with them. We've seen, obviously, a reduction in utilization in China, across Asia. And then as the months passed by, March, April, started occurring heavier in Europe. And then with the US, I think lagging behind the reaction and ultimately encompassing the US as well, South America. We have a customer base across the world with 46 airlines here at Genesis. And I think all of them have been directly impacted. The nature of a pandemic, I suppose. At the same time, each of them have behaved in a very different way and worked very closely with Genesis as to how they could work through the difficult, and still doing that to today.
And how have those asks evolved? So you would have had obviously the deferral requests at the beginning. Have they evolved into different types of asks, or what kind of challenges have those conversations thrown up for the business?
Well, I think the biggest challenge we had originally is realizing the depth of what was going on. And, looking back in March, April, it wasn't long before the airline's utilization was down below 80% of what pre-COVID was. And then, as I mentioned, as it panned across Europe and the Americas, it sort of normalized in around sort of 60 to 80% of lack of utilization. With that brought a lot of challenges with the airlines. I think initially we worked with the airlines to give them space. So we focused on cash flow management, where we could provide some support deferring rental payments. We did, and we did that on circa 3-month periods. And then, certain airlines needed a little bit more. We were able to provide that. And then it was like a bit of a pincer movement throughout the period where Genesis worked closely with the airlines. Some looked for power by the hour agreements with various caps and collars. Our overarching focus was to retain long-term shareholder value and long-term investment value. So we were able to extend some leases and reduce payments for certain periods where airlines were able to catch up and pay back effectively, Joe.
And as given the depth and scale of the crisis, we've actually seen relatively few airline failures. Has that surprised you? And what's your outlook from an airline perspective out over the course of the first 6 months of this year?
Yeah, I think I was looking at it there recently, and there's circa about 30 or 33 airlines that have gone into either restructuring or bankruptcy. And in a way, it's still a considerable amount, albeit given the fact that there's been practically no travel, or let's say 70, 80% down on pre-COVID travel numbers. The expectation probably was that more would fail. And to be fair, I think although it may have taken a little bit of time, governments have provided great support. There's probably still a little bit more room there, and not just direct financial support, but also support around the regulatory side. And we saw, particularly in Europe, some relief with regards governments being able to make direct cash investments or cash support loans into airlines. I think as well, we looked around and saw that a number of our customers were in different positions. Some were large network carriers that had brought with them reasonable cash balances going into the pandemic, and it was really a matter of cost preservation, reducing cost, reducing the fleet utilization, and just hunkering down to get through this. And then others who had slightly thinner capitalization or shareholders that were spread across tourism, not just aviation, that would have had a challenge in themselves to try and recapitalize those businesses. So, we worked with each of them, and I would say on the whole, the airlines have responded incredibly well. I think they've done, on the whole, most things that they've said they would do, and we're continuing to work with them. And I think the challenges that have been delivered to each of them in the various regions has just been, significant in any given year, in any given way. So it's really just a matter of, cost control, managing their network, and suppliers like Genesis and other leasing companies, the OEMs, the governments, all collectively working together to try and get through this period. And now with the vaccine, of course, announced and in circulation, 2021, we're going to live the recovery during 2021 and hopefully see by middle of the year an improvement across the board of all the airlines. But I think we're still going to see some restructurings and failures in Q1 2021, but I believe it'll be less. I don't believe it'll be as significant as we've seen to date.
And as you try to assess new transactions, and you're trying to assess an airline credit, are the metrics you're assessing them under, have they been materially impacted by COVID, or what are you focusing on as you look at potential new transactions?
So we have a sort of risk and credit framework here at Genesis, and we're still following the same, standard approach, although there's a lot of turbulence in the numbers. There's a lot of turbulence in the market. So as much as we'll assess cash flow and the cash burn and the various leverage components of airlines and where they sit in the market and their FX exposure, a lot of that are small elements of really the bigger issue, and the bigger issue is just immediate cash flow. So we're looking really at the political focus, where they sit with regards to the likelihood of government support, the government support they've received, their shareholders' broader investments, whether or not they're centralized in tourism or they have a broader base which will be able to support them. How suppliers are supporting the airline. So there's a much more tangible, real-time, efforts and initiatives that the airlines are trying to put in place in order to stay afloat. And what we're appreciating on one hand, although it's a double-edged sword for us, is that those airlines that are being very transparent and demonstrating, look, we are only going to be able to do the following over the following months. And with that, then we can construct a structure around the lease and terms that we currently have to be able to be in a net neutral position over time. So I think the main issue is just airlines being able to conserve cost, reduce their network operations. And the flip side of this is, as we go through into 2021 with the recovery, we're going to start to see airlines starting to reactivate more aircraft. So we see it as a two-step process where airlines will first of all want to recapture as much of the market share they had pre-COVID. They may not get all of it. And then the second step will be to drive yield through that market share. And it's sort of an analysis to what happened when the low-cost carriers first started off. It was really market share first, and then they drove yield through the markets they created. We see that happening over 21 and 22. So market share and then growing yield.
And then looking at the debt side for, say, aircraft leasing, Karl, we've seen the very large players display remarkable resilience in what they've been able to tap on the unsecured market over the course of the pandemic, but probably more challenging on the traditional debt side. Very interested in your thoughts on what kind of challenges that'll throw up in 2021, and again, how it kind of feeds into the trading environment if we don't have a functioning debt system outside of those very large players.
First of all, I think we will have a functioning debt system. I think it'll, be delivered through various channels. If I look at Genesis initially, we don't have any near-term debt requirements or refinancing requirements. And I think one of the key drivers will be around the level of leverage, the amount of leverage that can be applied to the collateral that we or other lessors have. And I think there'll be a general tendency to focus on narrow-body aircraft. And I think there'll be a general tendency to focus towards new technology of those narrow-body aircraft. Even with the midlife aircraft, leverage is still available, debt is still available in the market for it. I think the wide bodies and some of the smaller aircraft, they may take a little bit more time for the markets to fully open up for them. But I do feel that, debt will be there. We've got, already engagement here at Genesis with various lenders, and it's really matchmaking with regards to the right aircraft with the right airline, with a lender that's, open to extending debt against those aircraft. We don't have here any direct capital markets products that we've used outside of term debt. We put a warehouse facility together just prior to the end of 2019. We still have that available to us. And the first refinancing is until 2022.
Shifting gears and looking a little bit on the OEM side, not one that's particularly relevant to your business model at the moment, but how do you see the pandemic impacting on how the OEMs will interact with the aircraft leasing community?
Look, I think the challenge is always when something's as disruptive as a pandemic occurs, or anything that immediately stops the demand side, which is effectively where this pandemic has really hit the market. So without any customers flying, airlines don't have the demand in their network. They're not forecasting the same level of RPKs. And as a result, the supply side of aircraft into the market since March of last year, plus probably into the end of 2021, middle of 2022, we've seen some low-cost carriers recently publicly reschedule some of their skylines. And I think what we've seen in the last number of downturns is the manufacturers behaving relatively responsible with regards to cutting production early, which stems the flow of capacity coming into the market. They've been very supportive, from what we can see, of airlines managing their skyline at an appropriate time, albeit there's a cost associated with the way escalation will start to build up on those deferred aircraft. But I think the relationship between the lessor and the OEM has always been a little bit of a double-edged sword. It's a capacity buyer from the leasing side of aircraft, but at the same time, the OEMs are selling into the same market lessors are trying to lease into. I think the COVID has been an interesting halt on the availability of aircraft going into the market from a lessor's point of view, or the OEMs, but I think it really masked a broader issue, and that issue was over-ordering by the airlines and lessors pre-COVID. And I think we started to see that in the likes of the types of returns we were seeing on new technology aircraft that were speculative, and the effects those speculative aircraft were having in the market as it cascades down to the current technology and older aircraft. So I think that sort of tension will always exist between lessor and OEM. I don't see any significant orders going in anytime soon, albeit there's probably opportunity with regards to the MAX now that it's been fully recertified. It's starting to operate in the US, and it's a market that has been now 2 years effectively, or a year and a half, without any real supply, whereas Airbus have had the benefit of the NEO, albeit reduced production rates and deliveries as a result of COVID. So I think, look, it's a challenging time right now, but I think lessor and the OEM will find their feet, and the model will continue, but it won't be for some time, I think.
And then we've talked to the distress that's there in the airline side, that there is a logical follow-on where you say, you have these requests for deferrals, cash flows constrained on the airline side, that will feed into lessors and have an impact. We haven't seen any formal, Nordic aside and their public scheme in relation to their debt pieces. We haven't seen any real distress feeding through publicly on the lessor side. How do you see that playing out over the course of 2021? And do you expect to see some lessors engage in formal debt restructuring?
Look, I think there's always a chance that there's restructuring required when the receivables are well below what was anticipated. And pre the vaccine being created, the timeline as to how well or how long this would go on was unknown. So I think most lessors I know would have considered what the sources and uses are since March. We've all been doing a lot of cash flow forecasting and management and preserving cash, working with our airline customers. But I think it really comes back to the composition of your portfolio. So just looking at it from a Genesis perspective, we've quite low leverage. There's a certain amount of discipline put on current technology, aircraft owners, where the banks have already prepackaged a certain amount of leverage, which works for us, for our investments, but it also is provided as protection. We're principally a narrow body. We have 100% narrow body aircraft in our fleet. Although asset values have come down, they've come down well within a range that is supported by our recent receivables plus our debt obligations. And I think if you look across the board, if the composition of your portfolio, that business you wrote over the last 4 or 5 years is properly risk adjusted in your portfolio, and you've got the right mix with the right counterparties and credits, I think everything will be fine. I know it'll be a difficult period, because even though we have a vaccine identified and it's starting to roll out, it really matters when the traveling public start coming back in numbers. And we expect to start seeing that towards the second half of this year and throughout 2022. So I think, look, there's always a chance, Joe, that lessors will have to do some restructuring or further with their lenders. But I think in the main, there's probably enough latitude and bandwidth with regards to their collateral, their portfolio, their cash position. For us, our leverage is right with the right aircraft types. So we feel comfortable. And I think, the lenders will want to work with lessors just like lessors want to work with airlines. Given something that's an external effect on the industry, there needs to be collective solutions, which, supports the lender, supports the lessor, and also supports the airlines. I think when we look back in March and we started to look forward to say, would we take aircraft back? What options would we have if we took aircraft back? There were practically zero. I think now looking forward into 21, there's a little bit more latitude. Airlines are interested in building networks and fleets for 2021. The schedules are starting to get firmed up. And with that, I think we'll see a little bit of movement in the market in 21, hopefully on into 2022.
That probably feeds into my next question, Karl, which is around that opportunity side. You have this dislocation, this distress in the market that will push out opportunities. Looking on the aircraft leasing side, what opportunities do you think will be arising over the next 12 months or so?
So I think, if those who have done their homework over the last 6-9 months, they have their balance sheets in order and have available capacity to acquire aircraft. I think there are good opportunities. There's nothing simple in this market. The credit will be key going forward. I think asset quality and credit quality together will be important. I think we're at the right point in the cycle to, take additional risk, but get rewarded for that. So I think the opportunities will be supporting airlines that have built up an encumbrance in their own aircraft and have the opportunity to do sale and leasebacks. I also think the new technology aircraft are on the right footing now. They've got the price, in my opinion, has adjusted into the right range, where the similar utility you would have got from a current technology aircraft, range and payload, versus what's there with the current technology or the new technology aircraft, the price point is about right. So I think it opens up more active participants in that space. And I think, in the next 6 to 12 months, selecting the right counterparty, selecting the right asset types as the market improves. Now, the debt is going to be obviously harder to find at the right price as it was pre-COVID. But that said, as the market improves, as the airlines start to get back up on their feet, our expectation is that we'll be able to purchase aircraft and, if necessary, refinance them in the market over the next 24, 36 months. So that's one side of the opportunities. I think the other side really is doubling down on the skill sets we've all had to deploy, not just in previous cycles, but in this cycle, to be able to maximize value and reduce cost in your business. And I think we've been able to do a good job here at Genesis with the team, focusing on just managing the individual maintenance events, timings with our customers, optimizing the fleet where we're able to swap out engines or extend aircraft or adjust terms and conditions that have very little value impact on the portfolio. And I think there are good practices, obviously, to carry on and continue. And I also feel that there will be a little bit more, focus on lower concentrations at different airlines. Not to say that the pandemic didn't really, it didn't respect those rules, but at the same time, I think it's helpful to have a more moderate level of exposure at different airlines. And with that, there'll be some trading opportunities between leasing companies, which we've enjoyed in the past.
And do you see the pandemic potentially driving any transformative change in aviation finance? You mentioned that piece where you've had to really get into the weeds with your customer base, and it's a consistent theme on across these conversations we're having, that I'd say if you asked an aircraft lessor what they know about their customers versus 12 months ago, it's increased massively. And I assume that's the same on the airline side. Do you think we could see a situation where this is going to drive an increase in leased aircraft, as effectively you've had a deepening and a strengthening of relationships between lessors and airlines?
I think it will, and I think it's already starting to. We saw some early announcements from European flag carriers that they wanted to expand their funding options, which included sale and leasebacks, sort of a space they hadn't really participated in large scale in the past. So I think airlines, with the amount of regulatory capital that's been pumped into airlines to date, and I think since COVID, it's just under $100 billion. You know, it's not going to be an endless bucket. So there has to be more opportunities to fund aircraft, which includes through the sale and leaseback market. I also think, you know, we as lessors need to think a little bit differently about how we interact with our customers. So, you know, there's one side we can do through technology and portals and make it easier to transact. But there's other sides where how do we help get them back up on their feet, and what type of service and support do we offer in the future? Here at Genesis, we've been working with, you know, all different business models, full service network carriers, charters, ACMI operators, low cost carriers, each of them having very, very different needs. And, you know, what we've identified and realized in our own market is that, you know, we actually have to make a bit of a market during the time when there's a pandemic. And we've been actively working with other airlines to provide capacity on a flexible basis. And I think that's something that we're going to look at a little bit more, particularly on the older aircraft, 17, 18 year plus, where they're very useful, still have plenty of utility remaining in them. And also focusing more on the engine management side, where airlines have options and can overhaul the engines, or lessors like ourselves who have engines available on aircraft that are coming towards their end of their useful life. We can use those engines to either lease or exchange on the fleet. So we're thinking a little bit more about the layers of service support we can provide to our airlines, in addition to funding some of their existing aircraft or aircraft that they're going to take delivery of.
And on the investor side, Karl, we've seen a broadening of the pool of investors that have come into aviation finance over the last decade, and an increase in their sophistication. You know, if we take the COVID will be a blip, there'll still be billions of capital that'll need to fund this sector over the next 5 or 10 years. Where do you see that capital coming from? Do you see it from that existing expanded pool that's arisen, or do you see the pandemic potentially driving a new category of investor that'll come to the space?
Look, I think it'll be a mix of, you know, what's currently there, those who are expert in investing throughout cycles, and that's going to be no different. I think there is, as much as there was plenty of pain up until today, I think going forward there's going to be great opportunities. So I think existing investors will continue in the space, or the majority of them. I think obviously there'll be new investors. Certain investors in 2018 and 2019 didn't see the value that exists today, or the opportunity from a timing point of view with regards to where we are with the cycle, be it the asset cycle or the actual market cycle for aviation. So I think both of those are going to drive a similar mix than what we've seen in the past. What we've seen, and a lot of requests coming into our businesses around how we could support and deploy equity on behalf of investors, particularly on the private equity side, whether they need small or larger portfolios of aircraft. And I think you know, it's probably no different really to what we've seen in 2000, the changeover between 2007, 8, and 9, where, you know, private equity will take an interest. Those experienced investors, be it institutional investors, will see the opportunity to reinvest in the space, or some that have previously exited will come back in. So I don't see it being any seismic change. I think it'll just be around, you know, a combination of new and existing investors.
And then a topic that's probably taken a backseat, understandably, over the course of 2020 as airlines fought for survival was around ESG and climate change. Obviously, the issue hasn't gone away in any way at all, and will come back. Do Do you think the pandemic is going to fundamentally change some of the challenges that are there for aviation in dealing with this topic? And then just ask you, is the sector as a whole, and I would include aircraft lessors, OEMs, airlines, are they doing enough to talk about the good things that are being done with respect to managing that issue around newer technology aircraft, or efforts on batteries, or efforts on new fuel types?
Look, I think there's always been a huge push within aviation. And to be fair, the OEMs have done a lot of pushing with regards to pre-packaging improvements on new technology aircraft as they came out, where there were 10, 12, 15% sort of fuel burn improvements, or whether the focus was on CO2, or prior to that, CO2 and NOx, noise, as you recall, would have been a big issue in the mid 80s, late 80s. So I do think there's a lot of good engineering work done in preparation, recognizing these are assets that have long-term lives, and it's not unusual to have 25-year economic life on a narrow-body aircraft. So you sort of have to build that in. I think the industry as a whole hasn't probably embraced enough of that and pushed that agenda a little bit more and communicated that a lot clearer. Now, there's a lot of that had been occurring pre-COVID. I think we all have to do our piece. I really do. I think right across the board, COVID or not, and it'll be a little bit harder because there's a burden of costs being built up within airlines and liabilities that didn't exist when everybody was very focused on improving the climate side on aviation emissions. But I do feel that everybody will still take a strong responsibility and do their piece. Now, how much they can do with the weight of the debt that's being brought into the market to survive through the pandemic, that's sort of an open question. But I think here at Genesis, the aircraft that we've been investing in, they're still the mainstay of most airlines' fleets. They're some of the most fuel efficient aircraft and some of the most environmentally friendly aircraft available. And I think we all need to consider how we do our piece. And I think just the pandemic is a big issue, and we've all gone through a lot, and we're only now starting to see a recovery. And I think with the recovery, the ESG and the environmental side is going to come back into the forefront. It'll have to.
And just in closing, Karl, as you look out over 2021, what are your optimism levels like? Appreciate that.
Optimism is high, actually. I don't know whether that's just because it's the first week back after the new year. But I can honestly say I feel the only way is up, and there is a really, really strong tailwind we have. We've got a vaccine. Its efficacy is very high, and there's more than one, and they're already being rolled out. So just like we all sat down at the turn of the year in 2019, realizing that a handbrake had been put on the world's sort of economy, and in particular tourism, anything to do with human interaction as a result of the pandemic. I feel that's sort of loosening now, and I think I can feel the momentum building up. And there's a pent-up demand on the travel side, on the tourism side, on just human interactions, the social side. So as soon as that's safe, and I think halfway through this year, we're going to see a safe place developing, and I think that will give us that extra kick to see through the end of the year. Now, with that, over the next 2 or 3 years, there's going to be a burden that we're all going to have to carry, whether it's sort of investor returns, airline balance sheets, or comfort of passengers flying again. But that recovery has started in my mind, and I can see the success come June this year, and towards the end of the year, it'll be quite evident.
We all hope that will be the case. Karl, I'd like to thank you for your insights today and wish both you and Genesis the best year possible ahead in 2021. Cheers.
Thank you, Joe. Thank you very much. Bye now.